Hello guys. Today is Sunday, and you know what that means. On this channel, every Sunday I try and give you 2 or 3 charts, like where I do top-down analysis, showing you what to expect from, you know, usually we do US 30, US 100, and VIX 75. So make sure that you stick with me throughout. Today I'm gonna start with Nasdaq, where I'm going to do the top-down analysis. It's more like carrying over from where we ended last week. As you can see on my screen, this was our prediction from last week, and you can see the price did exactly that. We reached that point. If you go to daily, we were still around here where we said we're gonna go until around this point here. If I can bring horizontal line so that you can see that we did get there. Yes, there you go, because we used it from this point and then going across like that. That's where we were saying it was gonna reach, and you can see we got there. So let's just try and update ourselves and see what it is most likely to do from here. So if you're new on this channel, make sure that you subscribe and you hit that bell icon, because this is where I teach how to approach the chart, guys. And if you've been on this channel, you know that I always try and clear the confusion, whatever confusion you may have. But if you're interested in the mentorship, because there are those that I took in and I'm mentoring them, I'm teaching them all these concepts from basics to more advanced stuff, so that they can be able to approach a chart the same way that I do and come up with their own setups. That's what I want. That's why I would never have a signal group, and you must stay away from those. Stay away from signal groups, guys. Make sure that you learn how to trade. Don't depend on another person, because if should something happen to that person, your trading is gone. You see, so rather go for the knowledge so that you can create your own setups, create your own signals. All right, let's get started. As always, we always start at the top. We always do the highest time frame first and work our way down, so that we just check if the structure has changed on the higher time frames. But here we can see that nothing has changed. If you watched the previous video, you'll know that this is the area of support we have, and this is the area of resistance we have. So the price on monthly is trying to move from support and go for the resistance, which is up there. So we are now sort of more than halfway, maybe 60% there. So we've been talking about this level for a very long time. If you've been on this channel, we've been talking about looking for buying trades from there. And if you're trading the higher time frames, that's where the price is most likely gonna go to. But you know that if you're looking at it on monthly like this, you can see that it's a smooth move. But obviously, because if you're checking the smaller time frames, you can see that in between it's been doing things, it's been doing this. So that's what you get. You need to understand how to reach the structure on each time frame, and then try and bring all of that together so that you can make your decision. So let's check. Okay, maybe it's fine even if you don't mark it. On weekly, we said that there was a time when the price was moving down nicely like this, and we had a bearish trend line there, and the price hit what do you call this, an area of support here. I think we used this one. If you've been following the videos, we're saying this is support and this is the resistance on weekly. So the price was trying to get there, coming from the support. If you're trading weekly, remember you need to pick your time frames and stick by them. So here the support was here and the resistance is there on weekly. But remember, on monthly the support was here, but the resistance is somewhere up there. So you need to stick to your time frames, guys. So the price went up, and let me show you. This is what we've been saying. If you can check here, the price was moving down, right? And what did it do here? It had what we call bullish engulfing. That's sign number one, that the bulls could be coming in. And then another one is that we are at the weekly support. So that's also says bullish. It's a bullish territory, and we have a bullish engulfing. And then we had what? Bullish rejection candlestick. So that's when we're like, no, the price now has higher chances of breaking this trend line. Why? Because it's forming all these signs of that shows that the bulls are about to come in. From there, the bulls took off, and they even broke the area of resistance, which means now you can mark this here. You can mark this and say, this is my weekly support that is fresh, and it's like it was formed maybe 5 weeks back. And from there, the price moved up and managed to break the bearish trend line and managed to break area of resistance. So it means that the buyers here, they're very strong. Look what they did. They managed to push all the way up. So we are not predicting that the price is going to come back, but we are saying should the price come back, you have got every right to buy from this level because of what it did. You do believe that it has a lot of buyers, which is why when the price gets back to it, if it gets back to it, you have every right to try and buy from it. So let's mark it before we move on. Let's mark it. So this is how you should do your analysis. Always start at the top, because if you just go straight, open a chart and open H1 and then start making decisions there, you are going to miss key information from the higher time frames. So I even commented on this candlestick and said this is very something that I don't like, and we can see that this is like an old area of support. So anywhere around here, guys, anywhere around here, the price is gonna struggle to pass there. So if you are looking to buy, it doesn't help in you trying to continue buying from where the price is currently, because of what the structure now, the location where you are located, it's not very nice for buyers. So trying to buy now, it's not a good idea. So that's all that you have on weekly. You can say that the price from the support pushed all the way up. Now it has hit sort of a resistance in a form of the old support. So I need to be careful in that area. If I had buy trades, if you checked the video that we made, our cover was that the price has higher chances of going all the way up, as you can see here. And now it did get there. So you see that you need to be out and start planning afresh. Unless if you're trading monthly, then you're still holding, because if you're trading monthly, even here on daily, price does this, it's not going to affect your structure on monthly, but I doubt you'll be trading the entire zone on a monthly. So you need to exit and then wait for the price to show you what it wants to do from the current area, because the current area is very critical. So meaning you can't just make decisions and predict that a certain point is going to be broken. You see, we don't trade like that. Even this level here, this one here, if you still remember this was the area where we said we are going to exit there. Why? Because it's an area of resistance. The price has never been there before. It's very fresh. So there's a lot of sellers there. So when the price gets there, it might struggle to break it. And it did. Because if you look here, the price got there with this point. The following week, we managed to come all the way down here. You see, the sellers were pushing to the downside. They just didn't win that battle, because the week before it ended, the bulls managed to come back in and push all the way up and defeat their level. But the point I'm trying to show you is that when you have key areas on your chart, when you know how to locate these key areas, it becomes easier for you to know where you're supposed to stay out of the market, where you're supposed to exit and just let the market decide on what it wants to do. And then whoever that wins, you start to join them. So that's all that you have on weekly, guys. So let's see what we're having on daily. So on daily, the level that we were talking about, the level that we had on our thing the last analysis was this one here. If you still remember, we marked it from somewhere around there. Yes, but let's extend it slightly a bit so that it covers the top. Yes, this one here, we used this area, because we didn't want to just draw it here. So we just were like, let me just move far to the left. And this is the one that we have before we can break the candlesticks. So we used this one and then looked at this one as like a retest of that level. Now the price is coming back to the same area. So which is why we were targeting there to say that this is a nice area. Look what it did. The price formed it when it was going down, strong to the downside, pause. Strong to the downside, came back, retest, came back, retest. Yes, the level is no longer the strongest now, because it has been tested 1, 2, and this is the third retest. Yes, we know that the more a level is being tested, the weaker it gets. But we're not saying just because it's weak, it needs to be broken. If you go with that approach, you're going to be disappointed many times. A trend line can hold the price 10 times. It doesn't mean that just because it's been hit 4 times, on the 5th attempt, it needs to be broken. The price can still bounce there. So we're just saying this is still a valid zone, but it has been tested many times. It is now weak. So meaning if you are trying to sell there, we need to make sure that we get proper confirmation, because of what? That level is no longer nice because it has been hit before, but we're not saying it should be broken. It can still reject the price. Go with that approach, right? So keep in mind that this is your weekly support, that one that we said, should the price get there someday, you are more than welcome to look for trades to the upside. But remember, this zone does not belong here. It belongs to the daily. We can remove it. It belongs to the weekly. We can remove it so that we can just start up assessing the level on, I mean, the structure on daily. On daily, always I say you must mark the level above and mark the level below, just like we did even with the higher time frames. Remember, on monthly we said level below, level above, meaning so that we know exactly on this time frame what is it that the price is trying to do. So we can say, oh, it seems like the support is in control, so the price is trying to move from support and hit resistance. So that's what we're trying to do on the higher time frame. On weekly, we did the same thing. We marked that support, if you still remember, we marked the support here and we marked the resistance here. It was broken. Then you move up and mark the next one, so that you always have a zone above and a zone below, so that you can see where the price is coming from and where it is going. So we need to do the same here on daily. On daily, we do have the zone above, which is this resistance there. Now, where is our thing, the zone below? Always mark the zone below, so that you can say that should the price be rejected from this level that just can gain control, where is it going to find the support? Where is it most likely going to find support? Always go with that approach, because if you're just entering a trade but you don't know where you're going to exit, or you don't know where the price is going to struggle to pass so that you can exit there, then it's pointless, because you're going to hold a trade, price is going to move up with you and come back and take you out. You see, so to avoid such, you need to be able to identify the key areas on your chart, so that you know that if the price is coming from this point, chances are that it is trying to reach for that point. So meaning, if I get an entry here, that's where I'm going to exit. You see, it's not that difficult. So here, let's just look for the area that we can mark. The area that we can mark here, at some point, if you still remember, we had this one where we were saying that the price is going to do something like that. I'm not sure if you still remember, but I can just show you the picture here. This is what we had in one of the videos. It was, I think, about 2 weeks back. We were predicting that it will, it was coming down, bounce there, and then go up like that. And it did exactly like that. Why? Because we identified this as a key area. So now, it's just that now the price has moved further from that level. Now the nearest one is this. So you can see that on daily, the nearest area of support is this one. You can even use so that you accommodate every small candlestick there. Yes, you can put it like that and say, this is my daily resistance there at the top. That is the daily resistance. And this is my daily support, and that's the resistance. So that you can see that should the price be rejected from that resistance, I cannot just ignore this. I can't. Only after it was broken, then I can start selling again, targeting the next one, which is this one. When it gets here, I'm out. I don't know what's going to happen. Yes, it was hit before, but it doesn't mean just because it was hit before, we know it becomes weak with the second touch, but it does not have to be broken. Always keep that in mind. So what else can we, let's just put a trend line here, because we do have some nice high highs and the higher lows here, which means we can have a daily bullish trend line from this and that. This here just looks like a move to the side and then continuation. It was not a pullback, which means I cannot add it to my trend line. That's how I trade, because sometimes it will give you some, you'll end up with the trend line that looks like this, which means you might end up with like a false breakouts. So to avoid such, I don't involve those ones in when I'm doing my trend line. So which means this area of support, yes, it's a very nice area of support. The trend line is still holding. We're still very much bullish. But just because we are bullish does not mean the price should move like this. The price should do this. This is a smooth, this is a healthy price move. Because this one, if it moves like this, is very dangerous. It's very dangerous. It can just fall the same way, which means you can cry quickly there. But if it moves like this, when it's about to change, it will give you signals. Maybe it will break the trend line, it will come back and break the trend line. But here, when it's smooth like this, you find that your trend line is still far. So you can't see even when it breaks the trend line and stuff like that. It's very tricky to trade when the price is moving straight like that, when the momentum is like that, because it becomes difficult for you to adjust your stop loss and know when the structure is about to change, because the key structures, the trend line or maybe the area of support, they're going to be far, unlike when the trend is moving like this. This is very smooth, because even the pullbacks will give you more entries, just like here, what we had here. It will give you more entries, and then you enter. We once spoke about this one, and then this was the next one, and then we got that, and then from there it took off. We have this one as the nearest one. It has never been hit before. So that's all that we have on date. Oh, and another thing that we need to note is what is happening here, guys. What do you think we have there? What do you think? That to me looks like a bearish engulfing on daily bearish engulfing, because you can see that the bearish candlestick, the body engulfed the body of the previous candlestick that was formed when you were going up. So that's a bearish engulfing. So meaning the price might just continue with that momentum and come to the opposing area of support. So you are more than welcome to try and look for trades to go down, because of what? The daily is pointing down. The daily is pointing down. And let's see, on H4, what do we have? What do we have on H4? So remember, this is the daily trend line, this one here. It was passing somewhere there. Yes, this is the daily trend line, right? And this is the daily area of support that we spoke about. All this mess here. So let's see. Yes, there was a video that I made. I think I put it on TikTok. Yes, I was just teaching them how to draw. I was just teaching how to draw a trend line, and the trend line that we had on H4 at some point, was it, where did I put it? Yes, even if you put it, it's fine. You can put it there. We had a trend line there using this point like that. You can say that was my trend line, right? If this was your trend line, it means it's just that the price action was very messy. It's either you use this as your support. Yes, you can use that. So maybe that's your area of support. It's not the nicest to the teaching with, but it's fine. That's the support. So you can say the price came back and broke the trend line, but it respected the support. You need to understand, this is very important. Just because you're breaking a trend line does not mean if you're no longer bullish, you're bearish. Just because you're breaking a trend line does not mean the price is now bearish, just to go all the way down. No, there is more to a structure than that. You cannot go like that. All right. So now the price, respected the support. This was the area of resistance. They're just too close to each other. So this is the area of resistance that did what? Oh, the thing moved now. So that's the area of resistance that did what? Let's just move back. The trend line was there. The area of support, the area of resistance. This is the support that gave us the last push and went up and allowed us to draw the trend line, right? And then this is the resistance that did what? That pushed down and broke the trend line, which means both of them are significant areas. So if you're trading from smaller time frames, you could look for trades to buy there, sell there, until one of them is broken. Why? Because they are key areas on this time frame. You need to pick your time frames and stick by them. Someone who's trading weekly is not going to be bothered by what's happening on H4. But if you're trading M15 or you're trading H1, you need to know what the H4 is doing, because H4 is bigger than what you are trading. You can't ignore that. You cannot, because price has higher chances of what? Respecting a zone on a higher time frame than on a smaller time frame. Meaning if I'm trading H4, if I'm trading H1, and there's an area of support that I'm trying to buy from, but the price is coming from H4 area of resistance, that H4 area of resistance has higher chances of pushing all the way down and taking out my support on H1, which means I cannot trade H1 without knowing what's happening on H4. That's what I mean, right? So the price then went up and pushed all the way up. So which means this area here is the new area of support that pushed up and broke that area of resistance that was very significant. So when that happens, when you have a new high like that, that's when you can that's when you're allowed to bring your trend line there and adjust it and say, I have a nice area of support here, which is the one that pushed up and broke that area of resistance that we spoke about. But you can see, look at this price action here, guys. Look at this here. when the price is moving, when the bulls are in charge, we want to see them making nice and big candlesticks to show that they are in control. But now there you can see the type of candlesticks they are forming. It's not like very convincing. There's too many tails, there's too many rejection candlesticks there. Why? Because of what? The price is approaching a higher time frame area of resistance. We spoke about the daily area of resistance there. If you are holding your buy trades, you cannot ignore that. You can see that now the buying pressure is no longer enough. The buying force is no longer enough. The buyers are no longer enough because of what? Look, they don't have momentum anymore. Because remember, when we are here, when the price is coming from down here, there's a lot of buyers here. They are going to activate, and then now the price is going to move with high momentum. But when you're approaching the next area of like resistance like that, some of them are exiting like that. The pressure is dying down slowly. That's why you're going to end up having price action that looks like this. But if you don't check other time frames, it's very easy for you to miss these guys. So we can see that the price moved all the way up, and then it hit that daily area of resistance. From there, look what the bears did. Why? Because the price has hit a seller's territory. There's too many sellers in that area, which is why the momentum just went down like that, which is why we don't predict what's going to happen. We don't know. But when you get there, if you have a buy trade, the best thing to do would be to exit. Take your profits and then watch from the sidelines what happens. Then you can decide if whether you want to continue entering or not, based on whoever wins at that level. So now we have your trend line there on. Remember, this is the daily one. We can remove this one because it's a daily one, and we are assessing H4. We need to know what's happening on H4. We need to make our decision here on H4. It's up to you. You can use this because this is just like a sideways move, and we said the sideways move, we can't use it to draw a trend line. It's up to you. If this looks like a pullback to you, you can use it to draw the trend line. That's totally up to you. You can draw your trend line here like that, or you can even start it here like this. It's more or less the same thing as you can see there, but it's fine. Let's use this 2.C because these are the two most recent ones. There is your H4 trend line, and this is the area of what? The area of support on H4. So now my question to you is it safe for you to buy here? Is it safe for you to buy from this H4 trend line? Because remember, the trend line is still holding, and we still making like those nice higher highs like that. Is it safe to buy there? The answer would be no. Why? Because of what? You can see that as much as the price action is not smooth here, but we can definitely see that we went up and then sort of paused and tried to go up again. So which means there was sort of an area of support here, but we couldn't take that one. We couldn't buy from that one because of what? Already the price, this is H4 support, but already the price has hit daily resistance. It's coming from daily resistance. If that daily resistance is pushing the price down, I cannot try and push against that with an H4 level, because I just told you now that the higher the time frame, the stronger the level. Always go with that narrative, otherwise you're going to be in trouble. So even the same here, the price, we know it's coming from daily. Why would I want to buy from this? Yes, the price can react to that, but I need to play as safe as possible. I need to buy from the area that I know that I have got higher chances of winning. So here we're not gonna do that. I would rather wait for the price to break and break like that. This one I can take even though it's on H4. This one I can take. Why? Because it is not just H4 level. It's an H4 level inside a daily level. Price is coming from daily. It can respect daily. So it's daily versus daily. There I can take my chances. You see, unlike daily versus H4, it's not the same. This H4 and this H4 are not the same. This is H4 inside the daily. There's a lot of bias here. There's a lot of strength here because it's also a daily level. Unlike this one. This, we can't fight that with it. You see, so that's how you make your decisions. That's how you make your decisions, guys. So I can say that in conclusion, this is what you can expect here. There are those who can, like I said, if you feel like that's a sort of a pullback and you decide to put your trend line there, it means you're saying the price broke your trend line and it broke your support, and then when it goes up, I can look for trades from that area of resistance that pushed the price down and broke the support and resistance. So meaning if they are saying their trend line is here, if you are saying your trend line is there, it's up to you. Sometimes the price does not make like a smooth move where we can all agree and see that it's very obvious this is a pullback. Sometimes it will look like a pullback, but at the same time it will look like a market pause. So that's where you have to make your own decision. Or you can say it's not clear, I'm not going to take it, I leave. So you want the ones that are clear. So it's up to you. You need to make your own decision sometimes. So if you're saying that's a market, that's a pullback, it means your trend line is there. You're going to maybe look for reasons to go short there. Maybe like wait for the price to sort of give you, any signs of reversal there, and then you're going to target this. But remember, when it comes to this one here, you are more than welcome to take it because it's an H4 level, we understand, but it is inside a daily area of support. So I think that's all that we have on Nasdaq. That's all that you can expect from Nasdaq this week. I hope the way I'm teaching you how to approach the markets from the top to the bottom, it will help you guys, because it doesn't help you opening your chart and then you just go straight to M15 and say, I'm going to buy from this, and then it has to move up. But how did you come to decide that this is a significant area where you will find a lot of buyers if you don't know what the other time frames are saying? You see, it's very, very risky to trade like that. So it's important, if you consider yourself to be a technical trader, if you want to use their robots and indicators, they are going to sell you nonsense. They are going to sell you nonsense. I can tell you now. Someone can say, pay 10,000 to buy this robot from me. It's going to trade for you. But only to find that they don't even know who created that. They don't know. They just got it online for free, modified it here and there. They even changed the name to their own thing. And then they say, come and buy this. This is for instance, this is Anaconda. What? You see? There you are blowing your account. You don't even know how you blow the account. Already 10,000 is gone. You are blowing more money. But rather lose a trade where you know that you are the one who analyzed there and then you got it wrong. There, at least if you miss that trade, if you lose that trade, you know where you went wrong. You can always take notes and then what? Know where to improve next. That's what you should do. You should be able to do this top-down analysis so that when you are coming with your own setups, you can always monitor them, and then should they not go your way, you will take notes and then try and improve for the next trade that you take. If it's a robot, you are on your own, it's going to blow. You don't know why you took the trade there. You don't know anything. You are just frustrated that the robot was so expensive. It took all your money and then it's not bringing anything back. And you bought it. That's nothing you can do. So you need to be careful in this industry, guys. There's a lot of people who are just there to sell you things that they don't even know who created that. So now my suggestion would be that you need to stay away from the signals. Like, try and be a trader yourself. Someone can say, but how am I going to do that? I have a 9 to 5 job. Yes, that's why trading, that's why it has like different time frames. If you are trading H4, it doesn't matter what job you do. This thing takes 4 hours to form one candlestick. I'm sure within 4 hours you will have maybe your lunch. So, and one candlestick in most cases on your H4 is not gonna change anything. So meaning maybe you need like two candlesticks to change the structure on your chart. That's more like 8 hours that you spend at work. So you have got like a chance to like take trades, to analyze. You can even analyze once a day, at any time of your day. You just analyze. You know that I'm not. If you know that you have a job, all you have to do is make sure that you are trading the candles, the time frames that are gonna align with your lifestyle. You can do the higher time frames. You can't trade M15 if you don't have time to always open your chart every 15 minutes or every 30 minutes. So that's where you have a choice. So you can paying for signals because you're working 9 to 5 is not a solution. You're going to blow with the signals that you don't even know how they came about, because all they do is just tell you that buy, put the stop loss there. You don't even know why they're saying buy there, which is why I say you must go for the knowledge where you're going to learn how to come with this buy and how to place that stop loss, so that you know you'll be able to improve. Should that trade not go your way, you'll know where to improve. All right, that's it, guys. The decision is yours. But now that's what I teach the guys that I have. So that I told them that I'm not going to do the signals, because with the signals, the day that I'm not there, your trading stops. But if I teach you how to come up with the signals, even if I'm not there, you will still be able to trade and come up with the signals yourself. That's how you should do it. Paying someone the signal, say robot indicators, this, that, you're going to learn the hard way. All right, guys, that's it. I think we are done with Nasdaq. I'll see you in the next chart. It's most probably gonna be US 30 or VIX 75. All right, cheers, guys.